I'm Bevan Graham and I am the economist at Salt Funds Management. Salt is a boutique business. We have about 14 staff. We manage $2 billion across a range of asset classes. We were established in 2013 as a manager of domestic asset classes for a large institutional investor, and soon after that we added two alternative funds, the Trans-Tasman Long Short Fund, and we also launched the Carbon Fund. More recently we've broadened out those product offerings to global asset classes and built two diversified funds as well, and we are wholly owned by our staff. The domestic asset classes are managed in-house. We've got 3 portfolio managers and they're supported by 4 research analysts. The external asset classes, or the global asset classes, are managed by experts in their own field. We've got Stanley Investment Management managing global equities and global bonds. We've got a firm called Cohen Steers out of New York who are managing the listed real assets for us. So they're managing global listed real estate and global listed infrastructure. And Cohen Steers are actually pioneers of that field. They launched the first US real estate investment trust back in 1986. We've also got an investment strategist, Greg Fleming, who manages the asset allocation around the diversified funds, and I do the macro research as an input into that process. We are first and foremost an active investment house, and those active investment decisions are very much research driven. So when you look at a makeup of the staff in the firm, there is a strong commitment there to research analysts. And we picked our external investment managers on exactly the same basis, a strong commitment to research driven investment decisions. And essentially what we are looking for is firms that demonstrate stable cash flow and predictability of earnings. We take ESG very seriously at Salt, and rather than applying an overlay at the end of an investment process, it's very much integrated into the research that we're undertaking on every firm in terms of identifying where those opportunities and risks may lie. We're long-term signatories of the United Nations Principles of Responsible Investment, and we are founding signatories of the Stewardship Code here in New Zealand. At Salt, when we were building out our new global asset classes and our suite of diversified funds, we thought that we would just go back and identify what some of the big structural challenges were going to be in the world over the next 30 years. It was pointless to build portfolios that would fit the last 30 years when you've got a blank bit of paper and you can start thinking about those things right from scratch. So the things we were thinking about were sustainability, we were thinking about climate change and decarbonisation, we were thinking about demographics, we were thinking about geopolitical risks and tensions. So our portfolios were built and our managers appointed with very much those long-term structural challenges in mind. A number of things that set Salt apart. Firstly, we are domestically owned and owned by our staff, so we're not subject to the whims of external owners. Secondly, we are an active investment house, and those active investment decisions are researched. And thirdly, well, look, we're very thoughtful about the future of the world and understand the challenges that investors need to navigate over the period ahead. We think it's great that we can access KiwiSaver without becoming a scheme ourselves. So it's wonderful that schemes like GoalsGetter have opened up their platforms to managers such as ourselves. The other factor is that we fundamentally believe in the importance of advice. And so we like the fact that GoalsGetter is also advisor intermediated, and I think that just creates a great platform for clients to get the best out of their KiwiSaver.